Your money-making broadcast starts now. Wall Street closed in the green on Thursday, with all three major indices posting solid gains as corporate earnings and AI momentum overpowered lingering inflation concerns. The S&P 500 rose 0.79%, the Nasdaq 100 added 0.71%, and the Dow Jones Industrial Average gained 0.74%, briefly crossing back above the 50,000 threshold for the first time this week. The VIX fell 3.41%, signaling that investors are growing more comfortable with risk despite the uncertainty that remains on the inflation front. Cisco Systems was the standout winner of the day. The networking giant jumped 13.41% to $115.53 following an earnings report that beat expectations on both revenue and profit. It was Cisco's largest single-day gain in its history as a public company. The message from management was unmistakable: AI networking demand is accelerating rapidly, and Cisco is well positioned to capture a significant share of that spending. Data center operators upgrading their infrastructure for AI workloads are driving orders at a pace not seen in a decade. On the AI front, Nvidia shares climbed 4.39% to $235.74 as reports confirmed that CEO Jensen Huang has joined former President Donald Trump on a trip to China. The visit underscores the strategic importance of the semiconductor industry in U.S.-China relations and highlights just how central AI has become to geopolitics. The AI trade continues to dominate headlines, and investors are rewarding companies that can demonstrate direct AI exposure in their earnings and outlooks. But the semiconductor story has a dark side. Qualcomm tumbled 6.14% to $200.08, extending its recent sell-off deeper into correction territory. The divergence between Nvidia and Qualcomm illustrates a powerful rotation taking place within the chip sector right now. Investors are rotating out of mobile and automotive semiconductor plays and pouring into pure AI infrastructure names. Micron Technology also fell, losing 3.44% to $776.01, while Intel dropped 3.62% to $115.93. The message is clear: in this market, AI exposure is the only thing that matters. The IPO market delivered a major story that cannot be ignored. Cerebras Systems, the AI chip startup that competes directly with Nvidia in the training and inference market, priced its initial public offering at $350 per share. The deal is the largest AI IPO in history by a wide margin, and the stock surged in its first day of trading, validating the pricing. The successful debut sends a clear signal to the market that investor enthusiasm for pure-play AI companies remains at an all-time high, even for companies that have yet to achieve sustained profitability. This IPO could open the floodgates for other AI startups waiting in the wings. Turning to the macro landscape, Treasury Secretary Scott Bessent made headlines today by stating that the economy is experiencing disinflation despite the hot consumer price index reading released earlier this week. Bessent's comments suggest the administration believes inflation will moderate on its own without aggressive action from the Federal Reserve. His argument rests on the idea that shelter costs and used car prices, two major drivers of the recent CPI print, are lagging indicators that will cool in the months ahead. However, the bond market is sending a very different signal. Yields on longer-dated treasuries have risen in recent sessions, indicating that fixed-income investors think the Fed is behind the curve on inflation and may need to keep rates higher for longer than currently priced in. The situation is made more complex by reports that Kevin Warsh could be in line for a leadership role at the central bank, a transition that could meaningfully shift the Fed's policy trajectory toward a more hawkish stance. This tension between the administration's narrative and the market's pricing will be one of the most important stories to watch in the weeks ahead. In the energy sector, oil prices climbed back above $101 per barrel as tensions between the United States and Iran escalated. The geopolitical risk premium is firmly back in the oil market, and energy stocks have responded accordingly with broad-based gains across the sector. Caterpillar, a bellwether for global industrial demand and a proxy for economic activity, rose 1.99% to $920.22, suggesting that the industrial economy remains resilient. General Motors added 2.56% to $77.75 as auto demand holds up despite higher borrowing costs. The consumer picture carries a significant warning sign that deserves attention. Household debt in the United States has reached an all-time high, with total balances now exceeding $18 trillion for the first time. Credit card debt, auto loans, and mortgage balances all edged higher in the latest quarter according to data from the New York Federal Reserve. Delinquency rates are also ticking up, particularly among younger borrowers. While the economy continues to grow at a solid pace and the labor market remains tight, the mounting debt load suggests that consumer spending may face meaningful headwinds in the second half of this year. This is something every investor should be watching closely, because consumer spending accounts for roughly two-thirds of U.S. GDP. In financial services, Charles Schwab announced a major strategic move today. The brokerage giant will now offer cryptocurrency trading directly to its clients through its platform. The move marks another significant step toward mainstream adoption of digital assets by traditional Wall Street institutions, following similar initiatives from Fidelity and JP Morgan. Meanwhile, inflows into exchange-traded funds tracking XRP continue to accelerate, with billions of dollars flowing into the product since its launch earlier this year. The convergence of traditional finance and crypto is happening faster than many expected. The clean energy theme received a notable boost as Nextpower Solar raised its full-year guidance, citing robust demand for new solar installations across both residential and commercial markets. Enphase Energy, a key player in the solar microinverter space, surged 14.31% to $48.01, making it one of the biggest percentage gainers on the day. Broadcom also rose 5.52% to $439.79, benefiting from its exposure to AI networking and custom chip designs. The move across clean energy names suggests that after a prolonged downturn, the sector may finally be finding a floor. Policy support from the Inflation Reduction Act continues to flow through the system, and installation backlogs are beginning to clear. Now let's talk about 4 stocks worth watching this week. Each pick reflects a different investment philosophy and strategy, giving you a diversified set of ideas to consider for your own portfolio. First, Ford Motor Company closed at $14.48, up 6.71% on the day. This is a classic value play that would appeal to the father of value investing, Ben Graham. Graham famously preached the concept of margin of safety, the idea of buying companies for significantly less than their intrinsic worth to protect against downside risk. Ford trades at just 6 times trailing earnings and pays a dividend yield of approximately 5.5%. The automaker is generating strong free cash flow from its commercial vehicle business, and its balance sheet is in much better shape than during the 2008 financial crisis. The market has punished Ford for its slowing electric vehicle transition, but the company's internal combustion engine and hybrid businesses remain highly profitable. For investors willing to look past near-term concerns about EV adoption timelines, Ford offers substantial downside protection combined with meaningful upside optionality. He would see a business trading below its replacement value with a durable competitive advantage, exactly the kind of opportunity on which Graham built his legendary career. Second, SoFi Technologies closed at $16.02, gaining 4.64% in the session. SoFi fits perfectly within the investment framework of Cathie Wood, the founder of ARK Invest, who focuses on disruptive innovation and platform-based business models. Wood has long argued that fintech platforms will disintermediate traditional banking by offering a superior user experience and lower costs. SoFi now has over 10 million members, and its product ecosystem covering checking accounts, lending, investing, credit cards, and insurance is approaching profitability at scale. The company reported its first profitable quarter earlier this year and is guiding for continued improvement in its bottom line. She sees a company that is gaining market share in a massive addressable market worth trillions of dollars, and with the stock trading at a fraction of its 2021 highs, the risk-reward profile is compelling for those with a 5-year time horizon. Fintech adoption continues to accelerate, and SoFi sits at the center of that transformation. Third, Enphase Energy at $48.01 surged 14.31% today in a powerful move that caught the attention of momentum traders and long-term investors alike. This pick is influenced by the investing style of the legendary former Fidelity fund manager Peter Lynch, who popularized the concept of buying what you know and understanding the businesses you invest in. Lynch had a remarkable knack for identifying companies with strong competitive advantages in growing industries before Wall Street fully recognized their potential. Enphase dominates the solar microinverter market with over 70% market share, and its technology is widely considered best-in-class within the industry. The company's microinverters are more efficient and more reliable than traditional string inverters, giving it a durable moat. With Nextpower Solar raising guidance and clean energy demand accelerating across both residential and utility-scale installations, Enphase sits at the intersection of an industry recovery and a moat-protected business model. He would appreciate the company's simple, understandable story and its strong fundamental metrics, including high gross margins and positive free cash flow. Fourth, Rocket Lab USA closed at $132.55, up 6.77% on the day. This pick draws directly on the philosophy of the legendary growth investor Phil Fisher, who taught that truly great companies can deliver market-beating returns over decades if you have the patience to hold them. Fisher pioneered the scuttlebutt method of researching investments by talking to customers, suppliers, competitors, and former employees to build a comprehensive picture of a company's true competitive position. Rocket Lab has emerged as the clear number 2 in the space launch industry behind SpaceX, and it has successfully expanded beyond launch services into satellite manufacturing, space systems, and component production. The company recently secured several major government and commercial contracts, and its backlog continues to grow quarter after quarter. With a launch cadence that is accelerating toward monthly missions and a total addressable market that is expanding as the space economy matures, Rocket Lab represents a pure play on the commercialization of space. He would recognize a company with superior management, relentless research and development investment, and a long runway for compound growth spanning multiple decades. The market is climbing a wall of worry, as it often does during bull markets. Record highs coexist with record household debt. AI enthusiasm coexists with a sharp semiconductor rotation. The tension between the administration's disinflation narrative and the bond market's inflation concerns will likely define the next phase of this rally. For investors, diversification across investment styles is more essential now than ever. Value investing, growth investing at a reasonable price, disruptive innovation, and long-term compounding each have their moment in different market environments. Having exposure to all four philosophies ensures you capture upside wherever it emerges, while maintaining the ballast you need during drawdowns. As always, do your own research before making any investment decisions, stay focused on your long-term objectives, and build a portfolio you can hold through the noise and volatility. I'm Chloe. See you at 7 a.m. Eastern for shorts. Subscribe and hit the bell. Check our shorts for a 60-second highlight. That's all for today. We all become wealthy together.